Starting the business for once with some good news. Good news, at least if you're Chinese. More signs that the Chinese economy, once again, showing the world how it's done.
Absolutely, yeah. This is the latest trade figures that we're talking about. We've got the figures for December, which show that exports in that month were up 14%, real explosion there, and imports were up 6%. This all comes in the context of the full year figures for 2012, which of course those round off. We have full year 2012 exports up 7.9%. And you can see exports were worth $2.5 trillion to the Chinese economy. Full year 2012 imports up 4.3%. So this is all being taken as signs of increasing domestic demand, growing middle class, people getting wealthier within China, and it's another sign that China is gradually recovering from its worst economic downturn since the 2008 financial crash. Factory output is another figure we've had, another sign of recovery. Analysts saying don't get too ahead of yourselves thinking this is going to be another drastic boom. There's a recovery, but it could be slow, it could be weak. China has surprised us before, so it's going to keep us on our toes again. Probably something quite interesting to point out, though, even though those figures are quite impressive, the Chinese government's targets for imports and exports for 2012 were 10%. Wow. Respectively. So the Chinese government will still be saying we can do more.
OK, I'm sure they will. I suspect the markets have been reacting pretty positively, though, to all that.
Yes, if we take a look at Asia, there's a lot of green on our board today. There we go, across the board there. So if we start first with the Chinese ones, Hang Seng in Hong Kong have hit a new 19-month high, boosted by those trade figures. Equally, the Shanghai Composite is also up, climbing on the export data there. The Nikkei in Japan, that's climbing as well. And we've seen that the nuclear sector is performing strongly. This after the Prime Minister announced that he's sort of relaunching nuclear power stations almost 2 years on from the Fukushima crisis. So in the United States, last night also closed up with lots of green across the board. We are seeing the start of earnings season in the US.
OK, now, as we've been telling you in the news bulletin today, Venezuela's Hugo Chavez has been given that green light from constitutional judges to postpone his inauguration indefinitely. But there are still signs that investors don't have much time for instability in Venezuela, which is Latin America's biggest oil producer.
Venezuelans are not the only ones worried about the political uncertainty gripping the country. Investors, too, are feeling the pinch.
Yes, bond prices have dropped, and just this week international banks, Credit Suisse, Barclays, Bank of America and analysts from the Eurasia Group have written about the worrying things that are happening in Venezuela.
The standoff between the opposition and the government over the postponement of the president's inauguration is causing ripples. But as the world's 9th largest producer of crude oil and the 5th largest oil exporter, Venezuela could withstand short-term shocks. Oil accounts for 96% of the country's exports and half of the government's revenues. Economists say the focus on oil has come at the expense of investing in other sectors.
One of the fundamental characteristics of Venezuela is that it lives off its oil wealth. When President Chavez came to power, oil prices were below $20 a barrel, and today they're near $100 a barrel. So there was a very strong growth in oil revenue. And this has also meant a strong growth in the Venezuelan state.
As the spending gap grows, Venezuela must deal with an overvalued currency and soaring inflation. It has the second highest inflation rate in the world. Last year, it was over 26%. A currency devaluation has been expected, but those plans and other needed economic reforms are on hold as the world waits on Hugo Chavez's health.
Well, that's investment in Venezuela. Catherine's got a story now. New investments in North Africa this time.
Yeah, to the tune of $100 million. Think about that. So this is going to start operating this quarter. And the countries involved are Mauritania, Algeria, Morocco, Tunisia and Libya. This is what we call the Arab Maghreb Union. This is an idea that's been a long time coming. The idea to improve infrastructure through investment and that, in turn, providing jobs and also political stability in the region. Now, this is one of the reasons why it's been a long long time coming. There hasn't been a lot of political instability in this region, in particular Algeria and Morocco rowing over the Western Sahara region. We've also had the Arab Spring has been a massive disruptor. But this Maghrebian Commerce and Investment Bank is now supposedly going to be up and running this quarter. And the IMF head, Christine Lagarde, was on hand in Mauritania for this big announcement about the $100 million. So it really looks like things are going to start happening.
OK, Catherine's got some news in brief for us now.
Yes. I'm going to start with the American insurer AIG, which has decided not to sue the American government for rescuing it. Taxpayers paid out $182 billion to stop the company from collapsing in 2008. AIG's former CEO is now suing for $25 billion in compensation for what he says was an unfair deal. But the company's current board has decided not to join him in a lawsuit that is proving less than popular with the general public stateside.
There are reports that US investment bank Morgan Stanley is set to cut around 1,600 staff. The job losses would focus on senior level positions and around half would be in the US. This is just the latest in a string of mass layoffs in the sector in the years since the financial crisis struck, of course. Morgan Stanley also trying to make cost savings elsewhere as it deals with a sluggish economy and tougher new regulations.
One more bit of news for you from the United States. President Obama is expected to name one of his longest-standing advisors as the latest Treasury chief. Jack Lew is currently White House Chief of Staff. He's also served as Obama's budget director, but analysts say he has too little business experience. American media are reporting that he will soon, however, be confirmed as successor to the current Treasury Secretary, Tim Geithner. The job switch comes at a tense time for US money matters as politicians in Washington continue to be deeply split over tax increases and budget cuts.
Now, we talked quite a lot about job losses here in France, of course, recently, but the steel firm ArcelorMittal, it could be bringing back employment to the industrial sector, couldn't it?
Yes, and we're not talking about a lot of jobs, but we are talking about potentially a couple of hundred jobs. This is because ArcelorMittal is going to increase production at a plant it runs in Dunkirk in the north of France. So there is some cause for celebration for workers up there. And this actually comes as the company announces it's planning to raise $4 billion on the US markets. Josh Vardy has more.
The news spread fast on the ArcelorMittal Dunkirk plant in northern France. Its second blast furnace is to be reopened, causing widespread relief across the site.
Well, we've had no news recently, so this announcement is reassuring.
This blast furnace has been closed for maintenance since August 2012, and it looked likely to remain closed permanently. However, a slight upturn for European steel and investment of €8 million may cause hundreds of temporary workers to get employment.
Well, we think Dunkirk should function with 3 blast furnaces. There's nothing that makes us think that it can work with only 2. So we're going to fight in the days to come for real jobs, stable jobs, employment at ArcelorMittal, permanent jobs.
However, over at the Florange site, relief is not the word. Employees on strike there have blockaded the facility and barriers have been set up at the local train station since Tuesday evening. The action has been called over the planned closure of the site, scheduled for March the 31st.
Finally, from us, some cultural business.
Yes, would you believe it exists? But it does. Now, I've never been to the city of Marseille in the south of France, but there's a good chance I might go this year, along with perhaps several million other people, because it has been named as one of the 2 European capitals of culture, along with a city in Slovakia that I can't pronounce. Now, a lot of investment has gone into Marseille ahead of this, around €600 million. For example, there's a new contemporary art museum, there's pedestrianisation of part of the old port area, which is obviously intending economic benefit via tourism. They're projecting a return of around €1 billion. The big question, though, is how many people will actually go. Around just over 10 million people went to Essen in Germany in 2010, just under 10 million to Liverpool in 2008, and Genoa got just over 2 million in 2004. So they're obviously hoping that the good transport links and the fact that it's in a Euro country might well help people to go there.
And she managed to pronounce Marseille at least. Catherine, thank you very much. Catherine Nicholson with The Business, the latest news from Cyril after.